Good morning, Paul Georgie from Allendale. It's April 28th. The markets this morning, we're sure that we're going to have volatility here today again. We've got the dollar making new lows. It looks like it's heading for the March of 2008 lows now, which is around the $71 area. Currently, we're trading around 73.38. Overnight, we took out the November 2009 low in the dollar at 74.21. The crude oil up a little bit here this morning, about 8 cents as we speak. Gold is sharply higher, $14 higher. Silver's up over $2.20 as we speak this morning. And a lot of this is off of the Bernanke speech yesterday after the Fed meeting, and basically said that he's monitoring things, but the inflation that we see in the volatility and price will take care of itself over time, so he's not going to step in and take any action at this time. And that caused the dollar to drop sharply yesterday, and we've seen more follow through there today. The USDA released the export sales numbers this morning. Corn, a pretty dismal 444. The trade was looking for 800 to a million tons. Soybeans, 199. The trade was looking for 350 to 550 there. So the high prices seem to have slowed down the world demand a bit anyway, and that's might be some of the reasons why we're seeing fluctuations here in the corn prices. This morning we've got new crop corn down about 5 to 6, while the nearby old crop corn still is strong, and we still look like we're going to have some pretty tight supplies here. But weather is another issue. Some of the early weather forecasts this morning has taken a little bit of the rain out for the Midwest, in the north anyway, to give us some chance to get some planting done here, maybe toward the middle of next week. And that certainly is about the time that amount of time we're going to need for these fields to dry out before we can ever get any equipment out on those fields. So those are things that I believe could cause and is causing a little bit of profit taking out in that December contract here this morning. But as we go into the weekend, we're going to be monitoring that very closely, and the long-term models, the GFS model is still probably the wettest model out there. The Canadian, the Euro model is a little drier, but all have moisture in it. And the bottom line is we need some openings here to get some of this corn in the ground, because normally we're about 40% planted on the weekly basis on this USDA report that would come out on Monday afternoon. So we're going to be well behind that, as we only had 9% planted last week. The bean situation, the consensus crush came out here this morning. Trade was expecting about 139 million bushel. It came out at 140.2, which is a constructive number as we look at it. However, we need a considerably a larger amount on a weekly basis, on a monthly basis, I should say, to meet this USDA expectation. So that's friendly on the first look, but when you get done looking at the whole thing, we still need to crush more soybeans. And what it tells us, we're building and the ending stocks that the USDA is going to give us numbers on May 11th. The wheat market, South Korea bought about 220,000 tons of Canadian wheat last night, Canadian feed wheat. The U.S. didn't get any of that. There's also talk in the FSU between Russia and Ukraine, especially, that they're talking about opening up their exports again here. The government's official position is they're not going to open up exports until they get harvest completed this year, which would be July, August timeframe. However, some of the indications are that they may may change their mind on that, and because of the supply of wheat that they have available to date. The livestock trade, we had cutout values down yesterday pretty much across the board. The choice beef was down 83, select down $1. We had pork cutout values down $2.38 yesterday, and you have to attribute this to two things. In the beef, I think it's directly correlated to higher energy prices. That's taking away the spendable income that families have. They're not spending the amount of money for the high-priced cuts. And in pork, it's the competition there of chicken, basically. Chicken meat is cheaper and also affected by energy prices, so consumers are going to a cheaper cut and cheaper priced product, which is chicken, and that is causing some pressure in the pork. And by the pork cutouts going down, packer margins are being reduced. Packers are trying to slow the chains, keeping things a little bit tighter there, trying to back off purchases, and that's putting pressure on the cash prices. Before we see stronger cash prices, we're probably going to need to see some better weather conditions so producers can get in the field, concentrate on field work, and not move hogs, and that's looks like it's going to be several days away. And the technical action in the market, we're seeing cattle prices down a little overnight, hogs under more pressure, and technically the hogs with the move that we've seen the last several days, it appears that there still is more downside potential there just based on technical liquidation. However, the fundamental situation, we should be getting into tighter supplies as we go into the summer months, and something that will be battling there as far as the reason for price movement. So stay in touch with Allendale. There's a lot going on here today. Weather forecasts are also extremely important and going to have an impact on us. But you can give us a call at 800-262-7538. Happy to answer any questions you might have. We wish you a very successful trading day. We'll talk to you tomorrow morning. Thank you.